Everyone is talking about the headlines. Trump is going to ban hedge funds from buying single-family homes. Wall Street is going to be forced to sell thousands of homes. And the very desperate hope of many home buyers is that that will flood the market with cheap inventory and finally crash home prices back to reality. It sounds great, but I spent 36 years in mortgage banking, and if there's one thing that I've learned, it's that political promises rarely, and I mean rarely, help the little guy. So today, we're going to look at the actual charts, not the headlines, to see if kicking Wall Street out will actually save housing, or are we looking at a completely different problem altogether? So let's start with the villain, Wall Street hedge funds. The narrative is that mega investors are hoarding all the homes. This is a chart from Urban Institute's types and shares of single-family institutional owners. That's a mouthful. Now look at the big blue bar of institutional investors out there. Yes, the mega investors we're talking about here, the ones with 100 plus properties in their portfolio. They're the big dogs. They make up 70% or about 78% of that group. So if the government forces them to sell, that sounds like a lot of houses, right? Well, here's the catch. Institutional investors only own roughly 3 to 4% of the total single-family rental market. Not all homes, just rental homes in the US. So even if they dumped every single house tomorrow, we're only talking about maybe 500,000 to 700,000 homes scattered across the entire country. Would it help? Yeah, sure, in some markets like Atlanta or Charlotte or Dallas, but it wouldn't crash home prices by 20% nationwide, because the hole we're in is much deeper than that, much, much deeper than that. The reason prices are so high isn't just because Wall Street is buying, it's because we stopped building. So this is the scariest chart in real estate. The black line shows the housing gap with pent-up demand. We're currently about 3.8 million units short, and that's expected to grow to 10 million by 2035. Remember what I just said. Wall Street might own 500,000, but we're missing nearly 4 million homes. So even if Trump kicks every hedge fund out, we're still millions of units short. Now, let's look at the Federal Reserve chart on building permits. Notice the massive dip around 2008 to 2011 and how choppy it is recently. And look at the permits after the 2008 crash. Builders stopped building. We had a lost decade of construction. We're trying to solve a 10-year supply problem with a 4-year political cycle. Builders just never got back on the trajectory that they were on to solve the demand problem. And had they done so, we would probably be able to sustain demand. The next chart is US home prices versus household income. So this chart explains why everybody is so angry. So look at the blue line. That's the median home price line. And in 1985, the median home price was $82,800. And in 2025, it rose to $426,800. That's an increase of 415%. Now the orange line, that's your paycheck. In 1985, median household income was $23,620, and in 2025, it only climbed to $83,730. That's only an increase of 254%. That's the big picture there. Affordability, that's the issue. Politicians can talk about down payment assistance or, banning hedge funds all they want to, but until the orange line catches up to the blue line or the blue line crashes down to the orange line, people are just going to feel poor. Okay, you say, but if rates drop, well, won't that fix the monthly payment problem? Well, I'm glad you asked. Let's take a look at the Federal Reserve chart for the historical 30-year fixed rate mortgage. This is the average interest rate over the last 30 or 40 years. We got addicted to 3% interest rates. We're now sitting between 6 and 7%, depending on various factors in a transaction like credit score, property type, or occupancy. Here's the irony. If rates drop back in the 4 to 5% range, what happens? All those buyers sitting on the sidelines, They jump back in. In fact, for every 1% decline in interest rates, 5 million home buyers re-enter the market. Competition heats up, prices go up. Lower rates might help your monthly payment a little bit, but it's likely that rates will push those prices right back up and make them go higher even still. So will Trump or any president actually drop housing prices? Banning Wall Street investors is a popular soundbite. It might help specific neighborhoods where investors went in really heavy. But nationally, it's a drop in the bucket compared to the 3.8 million homes we're missing. And unless building accelerates and supply catches up to demand, this issue just won't get any better anytime soon. We don't have a who owns the homes problem. We have a where the homes problem. So look at the headlines. They are confusing, but as you saw today, the math doesn't lie. You just need to know exactly where you stand before you start shopping. If you want to run real numbers for your situation, I put a link in the description below. You can reach out to me whether you're looking in Hilton Head or anywhere else. I can point you in the right direction anyway. But don't just guess. Do the math. I hope you found this video helpful. I hope it helps other people. And thanks so much for watching. I hope to see you in the next video.